Hello, everyone. This is Nadiv from Talking Business with Nadiv and Guy. Guy won't be joining us today, but I thought it would be an interesting short video that I can make about Netflix. I am a longtime follower of Phil Town, and I was very happy to hear the last episode of his podcast, Invested, with his daughter Danielle Town, where he really hinted in the thickest hint one can possibly imagine that he is loading up on Netflix. And I thought it would be interesting just to share my thoughts about this new purchase of Phil Town. Obviously, it's not an official, he didn't admit it officially, and the 13 Fs have not come out yet. But you are very welcome to listen to the last episode of Netflix and see how confident Phil Town is about the stock. And I am pretty certain that he is loading up the truck. Let's talk a little bit about Netflix. And everyone knows it's a streaming platform. Phil Town loves predictable, simple businesses to understand. He loves businesses that have a long and a wide moat, which he definitely pursues Netflix to have. And his theory is pretty much as follows. Netflix is the leader in online streaming. Online streaming isn't going anywhere. Netflix has the pricing power that other companies might not have to the same extent. Netflix is charging currently double the price that other platforms like Disney Plus or Amazon Prime are charging for the same service, and he only sees them being able to increase the price throughout time. Just recently, in the past March, Netflix increased their price by nearly 10%, and we haven't seen massive amounts of people leaving the platform. I myself use Netflix for many years. I don't use it very often, but I would never think about deleting it or unsubscribing unless, a lot of things would have to go bad for me to decide to delete my Netflix, because it gives me a lot of joy for the little price that I pay. And I think many people feel that way. And Netflix is definitely building a wide global moat. Also, with the number of subscribers, original content we saw in the last Oscars, that Netflix had, I think, like 27 nominees and won like over 12 Oscars. So it was really amazing. And you really see that Netflix also has the quality of a great film producer. It's a TV series, obviously. And I don't think Netflix is going away anytime soon. I think they're building their moat wider. They're starting to invest into the gaming scene, which might be very big. I assume that in the future, there won't really be a differentiation between gaming and seeing movies. I think most movies will have some element of activeness, so to speak. And I think Netflix is actually located really good in this sphere to gain marketplace, to gain share. So that is pretty much what I think that Phil Town sees about Netflix. Um, Obviously, the stock has been hammered over the last maybe 6-7 months. It's been going down. I think it's down pretty much 50% from its highs. Um, Not that that means necessarily that it's a bargain. It's a growth stock, and when these stocks mature and these companies mature and they don't grow as quickly, the price tends to tank, and people who bought just expecting endless growth forever and high rates tend to be decimated, and that's pretty much what happened here. But here we really see that the stock has gone down, and a lot of investors are looking at this in kind of a short-term perspective, and this is pretty much what Phil Town's approach is. That they're looking at the next, year or so and seeing that subscriber growth has been slowing, cash flows are not growing at all. They're just getting it worse. Also, net income might not be growing as quickly as before, and that many investors are starting to ask, how will this company make a profit throughout the long term, real profits, real cash flows. And is it a good company to hold in the long run? What will happen if interest rates go up? Could this company survive? Will people unsubscribe in a recession that we might be heading into? Phil Town's approach, and he really views this a little bit like a Chipotle Mexican grill, and that was the company that he compared it to. Phil Town's approach is that Netflix definitely has a long-term moat, a competitive advantage, and it's a service that actually might have more demand in bad times when people have less money, spare money to go out, maybe to a movie in a movie theater or to a restaurant. So they'll just sit and watch Netflix at home. And yeah, he definitely sees it as a great opportunity. I myself was very happy to hear that he was excited about it, because I was also just starting to build a position in the last 2 weeks. Um, I'm building my position slowly. I've seen with Alibaba how much stocks can go down further than what you could ever imagine. So I'm definitely building up a position in Netflix, and am not in a full position yet, even though I definitely think it is a good investment. Upside, downside, I think talking upside, it could easily double to the levels that it was just a few months ago. So I can easily see that happening in the next year or so. If the company reaches, strong cash flows, then we can see a triple with no problem whatsoever. It's just a question of, can the company get to that level of profitability and cash flow? They have to increase their prices and maybe grow a little bit more with their subscriber base, charge more in developing countries. Today, someone in India, for an example, might pay $2 or $3 a month for a subscription to Netflix, while in the US it's $15. So can they get those subscriptions, the prices up? That's a question that's yet to be seen. But when I look at a risk reward, I see that to be the reward. The risk may be down another 50% in the worst case, if numbers really flatten down and the company continues to struggle a few more years to get to free cash flow. If they get there at all, I do assume that they can get to free cash flow. They have strong subscribers, from strong nations who make a lot of money in general, and I don't see them having any problem reaching free cash flow. Another positive, I'm just going to skip that. Another positive that we see now is that Bill Ackman just bought a huge stake in Netflix, over $1 billion of a stake in Netflix. He's known to be quite an activist, quite an aggressive investor. He said that his approach has actually changed recently, and he's more looking into the long term, which is good. I think Ackman sees a definite potential for an easy double or triple in the next few years. Normally, Bill Ackman is actually right in these predictions, maybe 4 out of 5. If he's right, obviously he'll make his money and go. If he's wrong, we'll never hear about it again. But Ackman is a great investor. He's very, very focused on high quality companies with good moats, good durable moats. And yeah, in general, I'm pretty excited. I was excited to hear that Phil Town is hinting that he's buying Netflix. I really recommend anyone watching this short presentation to go and listen to Invested, to his podcast, where he speaks quite a bit about Netflix and about the moat. And obviously, this is not any investing recommendation. I'm just opening my position now. It's a small position for now. For now, I'm going to be learning more about the stock, learning more if I want to make it a bigger size position. I probably won't unless the price becomes dramatically lower. This might be just an opening position. And I hope you got value and you enjoyed this short presentation. And I'll see you next time.